Introduction: The Simple Path to Wealth, Book Summary. Welcome to our summary of The Simple Path to Wealth by J.L. Collins. This book is a game changer for anyone who wants to take control of their financial future. Collins presents a simple, straightforward approach to investing that doesn't require complicated strategies, high-risk bets, or being a financial expert. Instead, it's about living below your means, investing in low-cost index funds, and letting time and compound interest do the heavy lifting. The book emphasizes that financial independence isn't just for the wealthy or those with insider knowledge. It's for anyone willing to follow a simple and disciplined plan. Whether you're just starting out or already on your way to financial freedom, the principles in this book can guide you to wealth with minimal stress and effort. Over the next few minutes, we'll walk you through the key concepts and strategies from the book that will help you achieve your financial goals. From saving and investing to understanding the power of compound interest, this book provides the tools you need to build a secure and independent future. Chapter 1: Debt is not normal. Imagine having the freedom to make life choices without being constrained by financial obligations. J.L. Collins introduces the concept of FU money, a financial cushion that empowers you to make decisions based on desire, not desperation. Collins emphasizes that debt is a significant obstacle to wealth accumulation. Every dollar paid in interest is a dollar not invested in your future. By avoiding debt, you free up resources to invest and grow your wealth over time. The author also discusses the psychological impact of debt. Living with debt can lead to stress, anxiety, and a feeling of entrapment. By eliminating debt, individuals often experience a sense of relief and empowerment, paving the way for a more secure financial future. Collins advises readers to adopt a mindset that views debt as abnormal and undesirable. This shift in perspective is crucial for making conscious financial decisions that prioritize long-term well-being over short-term gratification. In conclusion, recognizing debt as a barrier rather than a necessity is the first step toward financial independence. By rejecting the normalization of debt, you can take control of your finances and embark on the simple path to wealth. Chapter 2: Why you need FU money. Imagine having the freedom to make life choices without being constrained by financial obligations. J.L. Collins introduces the concept of FU money, a financial cushion that empowers you to make decisions based on desire, not desperation. FU money isn't about wealth for extravagance. It's about security and autonomy. It's the amount of savings that allows you to walk away from a toxic job, take a sabbatical, or pursue a passion project without financial fear. Collins emphasizes that accumulating FU money is a critical step toward financial independence. It provides a buffer against life's uncertainties and grants you the power to live life on your terms. To build this financial cushion, Collins advises consistent saving and investing. By living below your means and directing surplus funds into investments, you gradually accumulate the freedom fund that can change your life. In essence, FU money is about reclaiming control over your life. It's a testament to the power of financial planning and the peace of mind that comes with knowing you're not trapped by circumstances. Chapter 3: The Importance of Saving. Saving is the cornerstone of financial independence. J.L. Collins starts by breaking the myth that saving is only for the rich. On the contrary, it's how people become rich. Every dollar saved is a soldier that goes to work for you, building wealth passively over time. Collins argues that how much you save matters far more than how much you earn. A high salary means little if it's all spent. The key lies in developing a habit of setting aside a substantial portion of your income, ideally 50% or more if possible. He also explains that savings provide more than future financial security. They offer psychological relief. When you have money set aside, unexpected emergencies or job loss won't derail your life. This peace of mind is priceless. To increase your savings rate, Collins suggests tracking expenses, identifying leaks, and cutting unnecessary costs. He advocates living simply, not cheaply, finding joy and richness in experiences rather than materialism. Ultimately, the discipline of saving isn't a sacrifice, it's a strategy. You're trading a little indulgence now for a life of freedom later. In Collins's words, the more you save, the faster you're free. Chapter 4: Investment Strategy. Index funds are the way. J.L. Collins introduces his core investment philosophy: keep it simple, keep it effective. And nothing embodies this more than low-cost index funds. He champions them as the ultimate tool for building wealth with minimal effort and maximum results. Unlike actively managed funds, index funds don't try to beat the market, they mirror it. This approach avoids high fees, reduces risk, and consistently outperforms most professional investors over the long haul. Collins recommends Vanguard's VTSAX, the Total Stock Market Index Fund. It holds thousands of U.S. companies, providing instant diversification and exposure to the entire economy in one simple investment. He explains that trying to time the market or pick winning stocks is a fool's game. The market is unpredictable in the short term, but steadily grows in the long term. Patience is the real superpower in investing. Collins also stresses minimizing fees. Even 1% annual fees can eat up hundreds of thousands over decades. Index funds like VTSAX charge mere fractions of a percent, leaving more money in your pocket. In the end, simplicity wins. A simple, low-cost index fund strategy is boring, but boring gets rich. This is the essence of the simple path to wealth. Chapter 5. The market always goes up. J.L. Collins addresses a critical mindset for investors. Despite downturns, crashes, and recessions, the stock market has always recovered and grown over the long term. Fear may cause people to panic, but history tells a different story. He reminds readers that market crashes are not the end of the world. They're opportunities in disguise. Every dip in history has been followed by a recovery, and those who stayed invested came out wealthier. Trying to predict when a crash will happen or when to get back in is nearly impossible. Collins urges you to stop trying to outsmart the market and instead focus on long-term consistency. The key is to ride out the volatility. The short term is noisy and emotional, but the long term is a steady ascent. Keep investing, keep your cool, and trust in the market's historical upward momentum. Collins concludes that belief in the long-term growth of the market is what separates successful investors from those who panic and lose. Patience, not panic, is the investor's greatest weapon. Chapter 6. Keeping it simple. Why most people lose money in the market. He stresses that simplicity in investing is not only more effective, it's also more emotionally manageable. Complex strategies often lead to panic when things go wrong. A simple, long-term approach offers clarity and peace. Collins highlights that the financial industry profits from making things complicated. They benefit when you believe you need their expertise, even though the results rarely beat a low-cost index fund. He encourages investors to ignore financial news, market forecasts, and economic predictions. These are mostly noise designed to provoke action, and action usually means mistakes and fees. Simplicity, consistency, and automation are the real secrets to success. Set up automatic contributions to your index fund and let time and compound interest do the heavy lifting. In closing, Collins reinforces the idea that most people lose money not because the market fails, but because they fail to stay the course. Stick with the simple path and you will win. Chapter 7. The Wealth-Building Power of Investing. In this chapter, J.L. Collins explains that investing isn't just a way to grow your savings. It's the most powerful wealth-building tool available to the average person. When you consistently invest over time, your money begins to multiply thanks to the magic of compound interest. He breaks it down simply. If you invest regularly, your money earns returns. Then those returns start earning their own returns. Over decades, this compounding effect turns modest contributions into massive gains. Collins gives real-life examples of people who reached financial independence not by earning massive salaries, but by investing steadily. The earlier you start, the more powerful the results, but even late starters can benefit greatly. He emphasizes that consistent, automated investing removes emotion from the equation. You don't need to be a market genius, you just need to be committed and patient. Ultimately, Collins wants you to see investing not as risky, but as a disciplined path to freedom. When done right, investing becomes a quiet force that builds the life you want, silently, steadily, and powerfully. Chapter 8. How to Think About Money. J.L. Collins emphasizes that money is a tool, not the goal. He urges readers to shift their mindset, stop thinking of money as something to hoard or fear, and instead see it as a means to live life on your own terms. He warns against letting money control your life. Many people become slaves to their income, living paycheck to paycheck, even on high salaries, because they chase status and possessions instead of freedom. Collins encourages readers to define what enough looks like. Understanding your real needs helps resist societal pressure to spend more and work harder just for the sake of appearances. He also explores the emotional relationship people have with money. Fear, greed, and envy often drive poor decisions. Learning to master your emotions is just as important as understanding investment strategies. Ultimately, Collins wants you to become the master of your money, not its servant. When you align your values with your financial habits, money becomes a tool to craft the life you truly want. Chapter 10: How to Accumulate FU Money. In this powerful chapter, J.L. Collins introduces the 4% rule, a simple formula that helps you determine how much money you need to retire. If you can live on 4% of your investments annually, you're financially independent. The 4% rule comes from the famous Trinity study, which analyzed decades of market data and showed that a portfolio of stocks and bonds could safely support 4% annual withdrawals over a 30-year retirement. Collins translates this rule into practical advice. Simply multiply your annual expenses by 25. That's your financial independence FI number. Spend $40,000 a year, you'll need $1 million invested. He stresses that focusing on expenses, not income, gives you control. Lower your lifestyle needs, and your retirement number shrinks, making FI faster and easier to reach. Collins also reassures readers that even if you withdraw 4%, your portfolio can keep growing, especially if it's invested in stocks like VT Sachs. The key is discipline and sticking to the plan. In the end, the 4% rule isn't about penny pinching, it's about freedom. Once you hit your FI number, work becomes optional and life opens up with choice. Chapter 11: Financial Independence is the Goal. In this chapter, J.L. Collins dives into the concept of FU money, the amount of money that gives you the freedom to say no to anything that doesn't align with your values or goals. It's not about being wealthy, but about having the ability to walk away from situations you don't want. Collins explains that accumulating FU money is a mindset shift. It's about having enough financial independence to live life on your terms, whether that's quitting a job, avoiding a toxic relationship, or simply having the freedom to make choices without financial worry. While FU money is often thought of as a massive sum, it's really about having a large enough cushion to avoid being dependent on anyone or anything. For some, that could be $500,000, for others, $2 million. The key is to stop chasing wealth for the sake of status and instead focus on the quality of your life. When you have enough FU money, you can take risks, be creative, and say no to things that no longer serve you. Collins offers practical advice for building FU money. Keep your lifestyle simple, invest consistently, and have a long-term vision. This is your ticket to true freedom. No more trading time for money, no more living in fear. Ultimately, FU money isn't just about having financial independence, it's about using it to build the life you want. It's about options, peace of mind, and the ability to choose your path without financial constraints. Chapter 12: How to Live the Simple Path to Wealth. In this chapter, J.L. Collins drives home the ultimate point. The goal of building wealth is not just about money, but about achieving financial independence, FI. FI is the freedom to live life on your own terms without being tied to a job or financial obligations. Collins makes it clear that financial independence doesn't mean living without work forever. It means that work becomes optional. FI allows you to work on what truly excites you, or take time off to pursue your passions without financial pressure. The path to financial independence is about prioritizing freedom over materialism. Collins highlights that most people live for the weekends, spending all week working just to afford things that bring temporary happiness. FI breaks this cycle. He explains that you don't need to be rich to achieve FI. What you need is enough passive income to cover your expenses. The quicker you reduce your expenses, the faster you can reach this goal. A lower cost of living accelerates your journey to financial independence. Collins also discusses the importance of measuring your FI number. This is the amount of money you need to invest in order to live on the returns. The lower your expenses, the quicker you can get there. Knowing your FI number gives you a target to aim for. Ultimately, Collins encourages readers to focus on the ultimate reward of FI, a life of freedom. It's not about having more money, but about having more choices, whether that's spending time with loved ones, traveling, or simply enjoying the simple pleasures of life. Conclusion: embracing the simple path. In the concluding chapter, J.L. Collins brings everything together, offering the blueprint for living the simple path to wealth. The simple path is about doing the basics well, saving, investing, and letting time do the heavy lifting. It's not complicated, but it works. Collins stresses that the foundation of this path is a focus on low-cost, broad-market index funds. They offer the best opportunity for wealth building without the need for complex strategies or constant market monitoring. He encourages readers to automate their investing as much as possible. Set it and forget it. This means setting up automatic contributions to your investments, so you don't have to think about it and are less likely to make emotional decisions. Another key part of the simple path is to minimize debt. Collins explains that living debt-free is one of the most powerful ways to achieve financial independence. The less you owe, the less you need to work to pay it off, and the faster you can accumulate wealth. Living below your means is essential. Collins encourages readers to avoid lifestyle inflation. Just because your income increases doesn't mean your expenses should. Keeping your lifestyle simple and frugal allows you to save and invest more. Finally, Collins reminds readers that the path to wealth is a marathon, not a sprint. It takes time and discipline, but with patience and consistency, anyone can reach financial independence and live life on their own terms. In conclusion, living the simple path to wealth means understanding that wealth isn't about luxury or status. It's about freedom, choices, and living life according to your own values. When you focus on the basics, save, invest, and live simply, you can achieve true wealth. Conclusion: embracing the simple path. In conclusion, the simple path to wealth is a powerful guide to achieving financial independence. It's not about chasing the next hot investment or trying to time the market. It's about consistency, simplicity, and discipline. By following the simple steps laid out in the book, automating your investments, avoiding high fees, and living below your means, you can reach your financial goals and live the life you truly desire. The key takeaway is that wealth doesn't have to be complicated. You don't need to be an expert to achieve financial freedom. You just need to be consistent and patient. Whether it's through investing in low-cost index funds or simply saving more and spending less, the simple path works. It's all about creating a life where money doesn't dictate your choices. So, take control of your financial future today. Follow the simple path, focus on the basics, and let time work its magic. In the end, the journey to wealth isn't about having more money. It's about having the freedom to live life on your own terms. If this video helped shift your mindset, hit like, subscribe, and share it with someone you care about. What was your biggest takeaway? Let us know in the comments below.